Good evening, everyone. So today I would like to show you a stock price analysis dashboard I built with the help of the Python framework Taipy. So you can see on the screen now that the first panel, it's basically several user input handle. So you can choose how long the data range that you would like to grab the data for. So the default is actually 6 months I set, but right now you're seeing it's actually year to date, right? So you can choose like the start date, right, from this date choices panel, and then the default would be whatever that's up to today. And then there are also tickers that you can input with text here, so you can just type whatever stock ticker you would like to query for. But then you can also choose these quick shortcut for the stock tickers, such as these big magnificent 7, right? And plus Bitcoin platform coin. But I'm not really interested in cryptocurrency, so most likely I'm more interested in NVIDIA, and also the leverage 2 times ETF of NVIDIA, which is NVDL. And then on the right over here, you can choose the number of days of moving averages, so simple moving averages in sliding window that you want to choose from. So right now what you see is 10 days, but you can also choose, say, 5 days. So just for example, if I choose 5 days and then you press enter. So yep, so over here, after we have chosen the date, so for example, we would like to choose year to date, right? So it will be 1, and then okay, let's say like also 01, right? And then so you see that if it's actually you're choosing 0 moving averages, so you don't really see any red lines on the graph right here. And then you will also see like the data panel underneath here, so there's no numbers at all for these last 3 columns, which indicates the moving averages of closing prices, right, for the days that you have chosen, and also the deviations of the stock price from the moving averages, as well as the averages of the deviations of whatever moving average days that you have chosen. So let's say after we have selected the date, the stock ticker, so now you can choose, say, 5 days, 5 moving average sliding window, right? So now you started to see the red lines show up on the graph, right? And then you will see also the data panel, right? The 3 moving averages column have also been filled, right? And so we can actually just like tinker with the moving averages days to see if the plot actually is a good helpful tool for us to make any judgment calls, right? So from my understanding or from my intuition is that I would actually, because most likely I would actually like to depend on the dash, especially the not the dash red lines, but the actual red lines on calling a selling date or a buying date, buying point, right? So ideally, I would actually like to see this line of, say, the tipping point, like the maximum point or the local minimum point to correlate with the actual local maximum point and local minimum point of the actual closing price, right? So therefore, it seems that 5 moving averages days right now is not that ideal yet, right? Then so let's then make it, let's say 10 moving average days, right? If that actually would help. So you see that actually after we make 10 moving averages days, that the red line's maximum point is actually moving closer to the actual closing price, right, of the local minimum or local maximum. So then, okay, so that's good to know. So then let's have a just try 15 days to look at if things even improve further, right? I would say that probably not, right? But let's just tinker with several more experiments to see. So 20, right? 20. I would say also not so much more helpful. Okay, so I guess then I would actually stay with 10 days, right? Okay, so this is the 10 days moving average we chose. Okay, so then let's start analyze this graph a little bit, right? So just maybe look at the past few months. Okay, so I'm gonna look at say starting from June, right? Um, so I'm just gonna probably pretend that I'm gonna use this red line to make a decision if I will sell or buy that day, right? Depending on all the information I have gathered up until that day. So whenever I actually that day when I see this spike over here, right? I'm probably gonna make a call to sell that day, right? Which is May the 28th, which which was having 15% or 16% deviation from the deviation average, right? So which is like a big deviation from its own average. So let's say that if I actually made the call to sell that day, the next day it actually dipped a little bit, right? But then later on it went up again, right? So probably I'm gonna miss, right, the growth of from the from the next day, which is 110, to the local maximum, which is $135. So that's probably like a 20% miss, I guess, right? But I guess that's okay because you avoid this like later dip, right? If you actually sell that day, so you actually were able to, like make up the loss, right? Which eventually actually dropped to $98. So I guess so I would say if I actually made the decision to sell that day, that wouldn't be the end, that wouldn't be so bad, right? Okay, so then the more important is if actually this is a somehow a indicator for buying point, right? I think that's actually more important, right? So let's say over here, right? So this one is just like a, this dipping point here, which is like a 3% deviation from the averages. So I would probably not to make a judgment call to buy that day, right? Because like, you know, like in up to that day, like the biggest deviation for dropping was like 11%, right? So here I would say, you know, it's probably gonna wait a little bit, right? So later on, I'm gonna actually add more additional information to this chart. Is so now we have this dashed line of averages of deviation. So if anyone has learned you know, like standard deviation, right, for a normal distribution, you know, you would have one standard deviation and also two standard deviations, right, which cover 95% of your points, right, in the context of a normal distribution. But then like one standard deviation, so I think it would be helpful to add here. So I'm gonna add just like a one standard deviation along this deviation average line. So then you will actually see whenever, you know, it dips further, right, which beyond the one standard deviation line, then it's probably gonna be a indication of a buying point that day, right? So for example, here when you just, you know, minus deviation of a 3%, probably it's still not a good buy point. But over here, you actually see, okay, you actually had the 7% dipping point. So probably you're gonna make a decision call to buy that day, right? 7%. So then if you actually have made that decision, then let's look at if it's something that it makes sense, right? Okay, so later on you see like the original closing price right over here. It's kind of like you know, like a dipping point, right? But you know, but later on it actually went up, right? Went up to over here, which is like another big deviation from it, right? So some people, if like the safer people, right, if the more risk averse people, that he might be able to use this point, right, to make a decision point to sell. But let's say that if like it's someone that's more of a risk taker, then he will probably not sell, right, over there. Then suddenly, right, it dropped to here, which is like another you know, -7 or -8% deviation, right? So if for those people that actually like to cut loss, right, then he might actually use this point to sell, to cut loss. So okay, so let's look at if someone actually make that decision that day, if it's something that makes sense. So that day is July 17th, right? Okay, so July 17th, the closing price is $118, and then this person bought at 118.11. So in that case, you know, he doesn't really have much of a like that big of a loss, right? So this is the risk averse person's decision. Let's say that if it's a risk taker, right? So he is not going to make a cut loss decision here. So he would keep the stocks that he bought at this $118, right, on June 24th. Okay, so he would keep the stocks even up to this point and then all the way along, right? Then the stocks actually start to dip further. And then, right, and then eventually up to $98, right? And then and then over here, it's actually went up to another, like 1% upwards, right, over here from the average, and then he will still keep it. Okay, and then up to all the way here, which is this person, this day, right? So this day, which has the dip, right, of the spike of over over like 15% upward than the average, then he's gonna probably make a decision to sell that day, which is like $130, right? So the guy bought at $118 here, which is let's assume he's a risk taker, and then he held it up until here, right? More of like a longer swing trader, and then he has hold it until this day, which is August 19th, and then 1:30 when this red spike line went up to all the way we saw like 17% up from the average, right? So therefore, he still made money, right? But then next, then the red line went all the way down to 12%, 12% downwards, right, on September the 3rd, right? So then he saw here, he could actually went in here to buy again, because the thing is, even though Nvidia, it has such a big large market cap, but you can see that actually its stocks is still quite volatile, right? It's just the nature of the stock, so which is good for some people, because with the volatility, it actually creates a lot of trading opportunities as well, right? And then so if like this guy bought here, so you see that, right, like all the way up to here, on September 12 or September 11th, right? Over here, or 12, right? So it went up, because when I actually marked, September 11th, it, like that you should sell this stock. It was because when up to, when it was 10th, right? September 10th, it was still minus 7%, but suddenly September 11th, right? It shoot up to plus, plus 5 5%, right? So this might trigger like me to actually sell that day, because it was already a big spike from the average, right? So which I did actually sell that day, right? But then like later on September 12th, it shoot up even more of a deviation up to 7%. But let's say, so that day when I actually said you should sell on September 11th, right? So then, even though September 12th, it went up a little bit more, right? So we can take a look at the actual price, right, for that day. So September 11th, it was $117. And then September 12th, it went up to $119. So it's like a $2-3 more. But then you can immediately tell September 13th, it actually went down from September 12th, right? So you can see that it's actually starting to create this kind of like a tipping point maybe, but it's still hard to say now. So it would be actually interesting to see what is the movement or momentum on Monday. But according to this indicator, I actually did sell on September 11th when it actually went up, uh, shoot up this spike. So I guess let's wait for Monday to see if it's something that makes sense for this indicator for back testing. Okay, so let's resume on Monday. Thanks for watching.